Good morning. It's Market Day Report. We're so glad you're with us here on a Friday morning. Thanks for sharing your day with us. And we hope we can bring you some useful information like weekly export sales report. It's out today. We'll talk more about that in a moment. First off, let's go to the board and see how we traded in the overnight session. We'll start with the corn market and corn. Again, that front month, July, 3 ticks higher, but it's the December that fell a half penny, 4.40 3/4. Also in the overnight action, soybeans were lower across the board. November down 5 1/4, 10.32. What about wheat? We'll start with Chicago. July, half penny lower, 5.33 1/2. Hard red winter wheat, July is new crop, tick higher, 5.32 a bushel. And then spring wheat has really led us higher this week. December, couple of pennies higher, 6.46 3/4. Cotton market in the overnight session, well, the December 67.80, up 4 points, but still in a pretty tight range of, well, about a half a penny. Brian Hoops is president, Midwest Market Solutions. Couple of things we have here. First, the weekly export sales, but another flash sell overnight for corn.
Good morning, Tony. You're absolutely right. Second consecutive day of a flash sale of corn this morning. So it seems like with just July corn falling to these price levels, it's a level that is stimulating some demand. So it was 210,000 metric tons total, and that was sold to an unknown destination. Now, the vast majority of that, about 145,000, was sold for this old crop marketing year, and the rest of it is sold for the new crop marketing season. So we are making a couple sales here last couple days, and it's been several weeks since we've been able to say that. The export sales out this morning, there's a 7-week low here for corn and for soybeans. Not great numbers by any means. Old crop corn was 36.1 million bushels, new crop only 1.2. Old crop beans 5.4, and new crop just 1.2 million bushels. So some really slow numbers as far as new crop. And if you look at where we are year to date for new crop compared to a year ago, about similar for both corn and beans, nothing outstanding. And as I said, sales are slowing down a little bit here, lowest in 7 weeks. So that's seasonally, that's what normally happens as South American supplies become dominant. And you look at the wheat, there's a bullish surprise here in the wheat. We did see some large cancellations of the old crop marketing year. Now, we only have another week to go for this old crop marketing year. So kind of ignore that they were rolling out of these previous purchases by 4.7 million bushels and move them into the new crop, 26.1 million bushels. That's an outstanding number. So our year-to-date new crop wheat sales, 180 million bushels. We only averaged about 120 over the last 10 years at this time in our history. So this is the highest and best pace we've been on for the new crop in the last 12 years for wheat. So a little bit of a surprise there maybe that wheat is seeing such good export business, but there's declines in the French wheat crop, concerns about Russia. So maybe it shouldn't be as much of a surprise as what I thought it was anyway, that we're seeing strong wheat business here for the new crop variety that we're waiting to be harvested.
And of course, that comes right in front of 2 consecutive higher closes for the wheat market. And that's all 3. That's Chicago, Kansas City, and Minneapolis. Obviously, though, the spring wheat has led the charge higher. Hey, Brian, hang on just a moment. We'll come back in a moment. We'll talk about livestock. Market Day Report continues in a moment. Let's talk livestock futures for a moment. And this is on the heels of a higher close yesterday for both live and feeder cattle. Let's go to the board. $1.60 higher on the June, and that settled at $215.52. The August contract at $210.07 was $1.90 higher, and $208.15 on the October as it settles $207 higher. Now the feeders, we've seen a lot of volatility in this trade. Went up above $300 on the August, but settled at $299.92. Up $4.30, September $4.37 higher at $298.85. You know, last week in our weekly export sales numbers, we saw China back in the market for hogs. June Yesterday, settling a quarter lower, 32 lower on the July and August in the red, but October and December contracts a little higher. So let's use that as a segue back over to Brian Hoops. We get a weekly export sales report this morning. Did you find China anywhere?
Didn't really see them showing up very much. And in fact, those sales for beef and pork, very routine, just inconsequential. So for the most part, I wouldn't say they were bad by any means, but didn't really anything stand out. It just pretty much routine sales that we continue to make for both beef and pork. Probably the best news for the cattle market's been the cash trade this week. It was called higher and it came in sharply higher. The trade we saw yesterday, especially on a dress basis in the north, that's where the cash trade is the strongest. In the south, we were 221 to 223, $1 to $3 better than a week ago. In the south, or excuse me, in the north, we were 234 to 235 live. So that's $3 to $5 better, and 368 to 375 on a dress basis. That's anywhere from $5 to $10 better. So some really strong numbers, especially in the northern plains areas. That is just outstanding cash markets. So feedlots continue to dig in their heels, continue to be rewarded. The cutouts are moving higher, so we're not really hurting the packer margins. We're not improving them. They're still almost $100 ahead in the red. And we continue to hear rumors or talk circulating that some plants will slow down or even close because of these negative margins. But right now, cash markets are just on fire. And you look at those deferred contracts, they're still probably the deepest discount in 10 to 11 years that we've seen compared to where today's cash markets are. So they have a lot of catching up to do.
Hey, Brian, it just has me thinking right now. You know, you rolled the clock back 4 or 5 years ago, and we were talking about we didn't have enough processing capacity. And now we're in a position where there may be a little too much capacity for what we have. Again, it just shows how elastic this entire cattle industry is, whether we're talking about the herd or we're talking about processing. Brian, always great to see you. We'll see you back here next week. Brian Hoops, Midwest Market Solutions.